What if one candle's visible height says $4, while its discontinuity-aware span is 8? Yesterday closed at 100. Today never traded below 104 and reached 108. High minus low sees only 4. True range reconnects today's bar to yesterday's close and sees 8. For a practitioner, that keeps an overnight gap from disappearing from the volatility picture. For a builder, it makes the answer auditable. 3 candidate distances, 1 winner, and the driver beside the value. That is why yesterday's close matters. True range measures the largest eligible price span in one bar, including a discontinuity from the previous close. Building on candle anatomy, we will keep high low and close precise, then add the one prior value the formula needs. You will calculate all 3 candidate ranges, identify the winning driver, implement the package convention in Python and TypeScript, test first bar and tie behavior, and diagnose why 2 platforms disagree. The boundary is equally important. True range is a directionless measurement in price units. It is not realized variance, a reconstructed intrabar path, or a trading signal. Start with the mental model. A finalized OHLC bar tells us the highest observed price, the lowest observed price, and the closing price for its interval. It does not reveal the route price took between those observations. So true range never claims to measure distance actually traveled. Instead, it asks how far the current bar's observed envelope extends when yesterday's close remains part of the comparison. Inside a continuous session, high minus low often wins. After a gap, one of the previous closed distances can become larger. The output remains non-negative and directionless regardless of which component wins. For every bar after the first, calculate 3 distances. First, current high minus current low, the intrabar span. Second, the absolute distance from current high to the previous close, the high gap. Third, the absolute distance from current low to the previous close, the low gap. True range is the maximum of those 3 values. The absolute signs remove direction because the question is magnitude. Yesterday's close is the last finalized anchor from the prior bar. It does not reconstruct every overnight trade. It gives today's envelope a causal reference, so an opening discontinuity cannot vanish. Now audit the synthetic example by hand. Previous close is 100. Today's high is 108. Low is 104, and close is 106. High minus low equals 4. The high gap is the absolute value of 108 minus 100, which equals 8. The low gap is the absolute value of 104 minus 100, which equals 4. The maximum of 4, 8, and 4 is 8, so high gap is the driver. Notice that close-to-close change is only 6. True range is 8 because it measures the farthest eligible envelope distance, not where the bar finished. The same rule handles several geometries. In an ordinary contained bar, high minus low dominates. In an upside gap, the distance from previous close to the current high can dominate. In a downside gap, the distance from previous close to the current low can dominate. An outside bar stretches above and below the previous close, so high minus low returns as the maximum. The driver label is not decoration. It tells an engineer which component created the published value. And because the measure is directionless, an upside gap of 8 and a downside gap of 8 can produce the same true range without implying the same price direction. The first bar has no previous close, so a platform must choose a policy. This package publishes high minus low at index 0. The high gap and low gap components remain null because those distances do not exist yet. TALib uses a different convention and leaves its first true range unavailable. Neither choice should be hidden. Exact ties also need a stable rule. This package gives priority to high-low, then high gap, then low gap. That priority does not change the numeric maximum, but it does make the driver label deterministic. Compare null states and first-ready rows before comparing the last pixel on two charts. The arithmetic is simple only after the data contract is sound. Use finalized bars in strictly increasing time order. High, low, and close must be finite, internally valid, and owned by the same instrument, venue, session policy, currency, and adjustment basis. Mixing a split-adjusted previous close with unadjusted current high and low can manufacture a huge gap the market never traded. Do not repair that silently inside the indicator. Reject it or reconcile the data lineage first. The caller also owns sorting, resampling, missing values, and provisional bar policy. True range should calculate from trusted observations, not guess how inconsistent prices were meant to align. True range is not recursively smooth, but it does carry one transition of memory. Row T uses today's high and low plus the close from row T-1. If the close at row T is revised, true range at row T can change because that close must still remain inside its own high-low bar, and true range at row T+1 can change because the revised close becomes its previous close anchor. The effect stops there. The formula also gives useful test properties. Values are non-negative, translation invariant when every price receives the same additive shift, and linearly scaled when every price is multiplied by the same positive factor. The reference implementation begins by validating the three aligned arrays. Inside one forward loop, high-low is always available. At index 0, both gap components stay null. From index 1 onward, the function reads the previous close and calculates the two absolute gap distances. It builds the candidates in stable priority order and selects a new candidate only when its value is strictly greater. That preserves high-low on an exact tie. Finally, it returns aligned arrays for true range, every intermediate component, and the driver. The Python and TypeScript versions follow the same state and comparison rules, so a disagreement can be located at one row and one component. One smooth chart is weak evidence, so the teaching fixture contains 6 synthetic paths with 240 rows each. Intrabar control checks ordinary high-low dominance. Upside gap and downside gap force each previous close component to win. Outside bar returns a maximum to high-low. First bar policy exposes the local fallback. Component tie proves the stable driver priority. Shared fixtures establish Python and TypeScript parity, while independent checks verify causal prefixes, invalid inputs, non-negativity, translation invariance, and positive scaling. These tests prove implementation behavior against the written contract. They do not prove that true range predicts returns or that any parameter is profitable. When two platforms disagree, do not begin with the final visible value. First, confirm instrument identity, data source, time frame, session, timestamp, bar finality, and adjustment basis. Then compare the first ready row and the first bar convention. At the earliest divergent row, inspect high-low, high gap, low gap, and the previous close each system used. After that, check exact high priority, null handling, full precision comparison, and display rounding. If an input was revised, recompute from the earliest changed observation. Publishing the components and driver turns a mysterious chart mismatch into a short evidence trail instead of a debate about pixels. Do not choose an indicator because two plots look similar. True range is one bar's discontinuity-aware span in price units. Average true range smooths those values, so it carries recursive memory and answers a different question about recent range scale. Bollinger bands measure dispersion of closes around a moving center. Donchian channels retain rolling high and low price levels. True range itself does not have a period, a smoothing seed, or a direction. It also does not predict the next bar from the sign or location of the winning gap. Choose by the statistic, unit, and memory the decision requires, not by the outline of the chart. You can now explain why true range uses yesterday's close. It keeps a gap from disappearing when today's high-low span begins entirely above or below the prior anchor. You can calculate the three components, identify the driver, handle the first bar and ties, validate price lineage, understand the one transition revision horizon, and debug a platform mismatch from the earliest divergent component. The complete true range article on the fintechbuilder.com includes the contract, synthetic fixtures, Python and TypeScript source, tests, visual atlas, and interactive laboratory. Next, average true range smooths this measurement and introduces a seed plus recursive shock decay. Continue with the full true range article and interactive laboratory on the fintechbuilder.com. Then build average true range from the measurement you can now audit.